Equity markets have seen renewed weakness in the last week as a relentless downturn in Adani shares has clouded the market mood. Despite the budget, which has earned praise from market experts, investors have not made any decisive gains following the budget. Analysts, however, expect the street to shrug off Adani shares-led volatility in a few days on the back of strong growth enablers laid out in the union budget.
Budget has delivered, all of us know, on capex program, 30% hike. What is interesting to note is that even in FY23, they almost reached the targeted capex plan, which is very rare in this country. Normally, the budgeted differ from actual. So while everybody knows the 30% growth, it's also quite interesting to note that FY23, the actual figure was also almost in line with what they budgeted. So that gives more confidence on the capex. And second, fiscal prudence. The targeted fiscal deficit was achieved. And so therefore, that is what stock market needs. Acceleration and growth and fiscal prudence, which are top priority of the stock market. As you mentioned, unfortunately, the Adani stocks are pulling down the whole market sentiment. It may continue for a few days, but I am sure within a couple of days, market would stabilize and budget would give required support to the market to recover. So therefore, whatever negative perception and all this should get over in a few days itself, because the punishment, whatever the market wants to give, it will all be over in a couple of days. So therefore, with a good budget, I believe in 2-3 days, the market should find its bottom and start recovering.
Echoing this, Morgan Stanley said the positive budget may lead to an increase in consensus earnings estimates. It says the sharp increase in capital spending, credible fiscal consolidation, no change in the capital gains tax regime, lower than expected market borrowings, and a likely shift in the RBI stance augurs well for stocks. We remain 10% ahead of the consensus EPS on the Sensex with an overweight stance on financials, discretionary consumption, industrials, and underweight on global sectors and defensive except technology. Following Hindenburg's report alleging accounting fraud, the Adani Group has suffered a cumulative market value crash of a massive $100 billion in the past 6 days. The sentiment worsened after global lenders Credit Suisse and Citigroup assigned zero lending value to notes issued by the group firms. Back home, the group has also scrapped its fully subscribed FPO given the extended market losses, and experts remain uncertain on how long the stock market rout could continue.
Difficult to say whether overdone or no. We'll have to wait because now the perception is negative in the whole group. So one has to see how long this negative perception plays out. So maybe one has to wait for a couple of days.
That said, the street will closely watch out the third quarter earnings of SBI, ITC, Paytm, Bank of Baroda, Indigo, and Divi's Labs today, along with the January services PMI data.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.